The average payday loan is around £265 and is typically taken out over 30 days according to the Office for Fair Trading. The Public Accounts Committee says around 2 million people in the UK use them. However, this burgeoning industry finds itself at the centre of much political discourse. The Conservatives have just announced the new regulator will be empowered to cap loan costs. Is this, along with similar Labour pronouncements, a pre-election reaction to public hostility to payday loans? I went to Winchester City Centre to ask the public their thoughts.
I think they should be outlawed. 100 years ago, or something like that, people giving them would have been arrested for extortion.
For me, they're only one step up from the loan shark.
And I think that they're targeting people who can't afford it.
They should do something to limit the interest, because people get into these things and they get in over their heads and it's a vicious circle. The reality of life says that some people need to make use of it. So you've got the realities of life on the one side and you've got the greed of some of the companies.
This industry was most recently valued at £2.2 billion. The OFT's 2012 compliance review established there were around 240 payday lenders. 19 have subsequently left this market. Southampton City Councillor Rowena Davis offers her reasons behind the rise in these loans.
The first is that the mainstream banks are failing ordinary people. So people who have paid good tax money to be able to support our banks now find themselves having to borrow at thousands and thousands of percent a year, whilst the payday loan companies can borrow a couple of percent from the mainstream banks. The second is chronic low pay. The third is the fact that we don't regulate these companies in the way they do in other parts of the world. And so a lot of them have come over here from the States and other parts of Europe where they're simply not allowed to operate. The fourth is increasingly easy access.
Richard Griffiths is head of media at the Consumer Finance Association, which represents the interests of its 11 payday loan members.
What we have in place is a code of practice which sets out a number of things for those lenders to abide by. So that protects the consumer right the way through the process. So making sure that all communication is clear and transparent, so the customers understand what they're signing up for, how much it's going to cost, how much the loan will work. How the loan will work, how the payments will be taken, right through to making sure that the lender is assessing the customer properly to work out whether they can afford to, service this loan.
I'm here outside Winchester's Citizens Advice Bureau. I'm going inside to visit Meg Chant, who deals with Winchester City Council's Money Advice Project.
The payday loan companies, virtually all of them, are now on, it's just an application online, and it takes within sort of 5 to 10 minutes, the payday loan company guarantee that the money will be in the client's bank account. So within that short period of time, what they do is a check on Experian, the credit reference agency, but they can't possibly have any time to do a proper affordability check.
Whilst the CFA maintains such assessments are a requirement of their code, Meg Chant undertakes them for her clients, liaising with their banks in the process. I spoke to one Winchester resident who wished to remain anonymous on the emotional impact of the approximate £15,000 debt she amassed in around 2 years.
I didn't tell any of my family because I was so sort of ashamed of having done this in the first place and embarrassed by it that, I'd worked all my life. Why couldn't I just pay the things? It sort of knocks you down really low, that you can't see an end to the money problems. And I was just going round and round and round in the circle.
So what alternatives exist to payday lenders? John Merritt, president of Solent Credit Union, offering loans from £50,000 to £10,000, explains his collective's approach to lending.
It's not a purely commercial decision. It's about what the member needs as well as what the credit union can afford to do, which is distinct from a payday lender or other lender who is simply taking a financial decision about whether that person is likely to repay or not.
Perhaps the future of payday loans will be determined by what users learn about their borrowing.
It's a good thing if used correctly, but if it's not, it's a dangerous thing.